Welcome back to BullionIQ, the channel where we talk all things finance, cryptocurrency, and market insights in a way that's easy to understand. If you're here for professional crypto analysis and real practical breakdowns of what's happening in the market, you're in the right place. Today we have some incredibly exciting news for XRP, and I promise you by the end of this video, you'll have a completely new perspective on why this cryptocurrency is being positioned as a global powerhouse. Let's start with a shocking piece of information. A recent report from WisdomTree shows that XRP is the only cryptocurrency attracting sustained institutional inflows across all regions. Think about that for a second. While Bitcoin, Ethereum, and Solana are seeing ups and downs, institutions, the big players, are consistently adding money to XRP, no matter what's happening elsewhere in the market. In Europe alone, XRP has brought in $549 million this year. That's more than Ethereum, more than Solana, and only behind Bitcoin. But here's the kicker. When you look at the size of Bitcoin's market, it's enormous compared to XRP. Institutions are adding almost 25 times more capital into XRP relative to its size. That shows strong confidence and preference for XRP over almost every other cryptocurrency. Outside the US, the numbers are similar. Investors added $252 million into XRP products, nearly matching Bitcoin's $268 million, even though Bitcoin's market size is much bigger. Dollar for dollar, institutions are prioritizing XRP. In the United States, synthetic XRP products have taken in $241 million this year, more than Solana's $206 million, and far ahead of other altcoins. Meanwhile, Bitcoin and Ethereum ETFs in the US lost a combined $6.4 billion in November alone. This is a clear sign. Institutions are betting on XRP, even in a market that's otherwise seeing selling pressure. Now let's look at exchange holdings for XRP. As of December 5th, 2025, total XRP on exchanges is about 16 billion, but 6.45 billion of that has already been purchased and removed from circulation since February. Supply is bleeding out, and long-term trends confirm this. Major exchanges like Upbit, Binance, Bithumb, and Coinbase are accumulating XRP steadily, while some smaller exchanges are seeing distribution. What does this mean? The supply is shrinking, demand is increasing, and this is a textbook setup for price pressure and volatility expansion. Quiet accumulation like this, combined with ETF inflows, is exactly what precedes major market moves. Speaking of ETFs, institutional activity in XRP is skyrocketing. US spot XRP ETFs have recorded 13 straight days of net inflows, pulling in over $50 million on a single day. Total cumulative inflows are approaching $875 million in just a few weeks. When you see numbers like this, you realize XRP is becoming one of the fastest growing crypto investment classes, outpacing even Solana in terms of institutional adoption. Solana may have great tech, but XRP is operating in a completely different league, especially with partnerships and global institutional integration. Let's add another layer to this. Robinhood recently bought Bitstamp, which is XRP infrastructure, and partnered with Citadel, now an investor in Ripple. This means the largest US market makers are getting involved. Once these players start using XRP actively, it's a domino effect. Institutions and corporations that haven't yet established a crypto strategy will soon feel the pressure to get on board. Combine that with limited supply and the potential for US regulation to clear uncertainties, and you can see why analysts are predicting XRP could move from $2 to $100 or even higher quickly. This is real-time institutional momentum, not a hypothetical future scenario. Regulation is another big point. The CFTC and SEC are actively working to establish rules and protections in the US, aiming to bring crypto trading back on shore. This means American investors, retail and institutional, can trade safely, and companies can build crypto infrastructure here. It also sets the stage for more capital to flow into XRP, especially as ETFs continue to accumulate. Every large institutional buy, like the $3.6 million by Rex Osprey, adds fuel to the fire. The trend is clear. XRP is becoming a mainstream institutional favorite. We also need to consider global adoption. Ripple has been building partnerships worldwide, especially in Asia and Europe. They've even introduced a euro-backed stablecoin integrated with the XRP ledger, designed for cross-border settlements within the European financial system. Big institutions like Deutsche Bank, Barclays, and BNP Paribas have been evaluating and using these tools to reduce liquidity and operational risks. The European Central Bank itself recognizes the efficiency of Ripple's system. This isn't hype. It's a real functioning global infrastructure that gives XRP tangible, practical value as a neutral bridge asset for international finance. Finally, macroeconomic factors make XRP even more attractive. Experts like Ray Dalio are warning about potential economic slowdowns and structural issues in the global monetary order. In times of uncertainty, capital flows into safe, efficient, and scarce assets. XRP checks all these boxes: limited supply, neutral, fast, and globally recognized. When traditional markets see volatility or risk-off flows, money looks for alternatives, and XRP is increasingly the destination. To sum up this first part, institutions are flocking to XRP worldwide, supply on exchanges is shrinking, ETFs are seeing record inflows, infrastructure is expanding, and macroeconomic conditions favor digital assets like XRP. If you're new here, this is exactly the kind of analysis you'll see on BullionIQ, helping you understand not just the numbers, but the strategy behind them. If you're enjoying this, make sure to hit that like button and subscribe, because we're going to continue breaking down XRP and other major cryptocurrencies in detail every week. We are going to dive deeper into XRP's position in the global financial system and why institutions are putting so much trust and capital into it. The first thing you need to understand is that XRP is not just another cryptocurrency. Unlike Bitcoin or Ethereum, XRP has been designed to work seamlessly as a settlement and liquidity tool across borders. This means that banks, financial institutions, and corporations can use XRP to move money faster and cheaper than traditional methods without depending on central banks or middlemen. That is why the interest from institutions isn't just a trend. It's strategic adoption that will continue to grow over time. A key example of this is how Ripple has partnered with major financial players worldwide. For years, Ripple has been in meetings with banks in Europe, Asia, and the Middle East, discussing ways to streamline cross-border payments using XRP. Big names like Deutsche Bank, Barclays, Santander, and BNP Paribas have been actively involved in testing Ripple's technology. These aren't small experimental deals. These are serious institutional partnerships aimed at creating efficiency in the global financial system. Europe, in particular, is positioning XRP as a neutral bridge asset. By using XRP and its stablecoin solutions, banks can settle payments instantly across borders, reducing liquidity risk, lowering operational costs, and improving capital efficiency. The European approach is especially interesting because Ripple introduced a euro-backed stablecoin integrated into the XRP ledger. This digital instrument allows near-instant settlements within the SEPA network, which is Europe's main cross-border payment system. Central banks and regulators are taking note because it reduces dependency on traditional nostro accounts, lowers counterparty risk, and provides visibility that is compliant with European financial regulations. The fact that the ECB itself has been involved in reviewing this system shows that XRP is being positioned as a core infrastructure tool for the future of European finance. When a financial instrument becomes the de facto standard by efficiency rather than mandate, adoption is almost guaranteed. And Ripple has been building these bridges quietly but strategically for years. In the US, things are moving fast as well. The CFTC and SEC are actively creating regulatory clarity, which encourages both retail and institutional investors to participate safely. New XRP ETFs have been launched, recording multiple consecutive days of inflows. And these ETFs have already pulled in hundreds of millions of dollars in just weeks, which shows a strong appetite from institutions. Big market players like Citadel are investing in Ripple, and exchanges like Bitstamp and Robinhood are facilitating XRP infrastructure. Once major market makers start using XRP for trading, liquidity, and settlement, smaller institutions and corporations are likely to follow. It's a classic domino effect where early adoption leads to mainstream validation and widespread use. Supply is another critical factor. XRP's total exchange holdings have been steadily declining as large purchases remove coins from circulation. With over 6 billion XRP already off exchanges since February, the scarcity factor is real. When regulation becomes clearer and more institutions enter the market, this limited supply will create additional upward pressure on price. Simply put, more demand plus shrinking supply equals significant price potential. This isn't theoretical. We've already seen how inflows from institutional ETFs can drive strong upward momentum even in months where the broader market experiences heavy selling. Additionally, macroeconomic conditions favor XRP's adoption. With global markets facing uncertainty, potential recessions, and changes in monetary policy, institutions are looking for alternative stores of value and reliable liquidity tools. XRP's neutral, decentralized, and programmable nature makes it ideal ideal for navigating volatile times. Unlike fiat currencies, which can be influenced by government policy or geopolitical tensions, XRP operates independently, offering stability and efficiency. This is why so many financial leaders and investors see XRP as not just an investment, but a necessary utility for modern finance. Finally, the combination of institutional interest, shrinking supply, ETF inflows, regulatory clarity, and global adoption creates a perfect storm for XRP. We are watching a rare scenario where a cryptocurrency is being positioned not just as an alternative investment, but as a core component of the financial infrastructure worldwide. For viewers of BullionIQ, this is exactly why understanding XRP's institutional adoption and utility is crucial. It's not just hype. It's strategic integration that could define the future of money. If you're enjoying this breakdown, make sure to like this video and subscribe because we'll continue unpacking XRP's global impact, institutional strategy, and future potential. And one of the most important things to understand about XRP is its unique position as a neutral bridge asset. Unlike traditional currencies tied to a single nation's economic policy, XRP is decentralized and operates independently. This allows financial institutions to transact globally without having to trust or rely on the monetary policies of other countries. This neutrality is a game changer because it reduces geopolitical and counterparty risk, making XRP extremely attractive for banks and corporate treasury departments. Recent data shows that XRP is experiencing strong and sustained institutional inflows across all regions. According to WisdomTree, it is the only cryptocurrency that consistently sees purchases from professional investors, even during periods when other digital assets are being sold heavily. In Europe alone, XRP brought in $549 million of new money this year, surpassing Ethereum, Solana, and nearly every other altcoin except Bitcoin. Dollar for dollar, institutions are allocating significantly more capital to XRP than Bitcoin, which shows an unprecedented level of confidence in its utility and long-term potential. In the United States, new synthetic XRP products recorded inflows of $241 million, outpacing Solana and other altcoins. While Bitcoin and Ethereum ETFs lost billions in November, XRP continued to attract capital, highlighting its growing dominance in institutional portfolios. The supply side also plays a crucial role in XRP's potential price growth. Total exchange holdings are dropping as coins are purchased and moved into private wallets, creating scarcity. Between February and now, over 6 billion XRP has been removed from exchanges. This declining supply, combined with sustained institutional demand, creates upward pressure on price. Major exchanges like Upbit, Binance, and Bithumb are actively reaccumulating XRP, while mid-tier platforms show rotation patterns indicating strategic positioning by large investors. The combination of rising ETF inflows and shrinking supply creates a perfect environment for price growth and highlights the serious commitment of institutions to XRP. We also need to consider the broader ecosystem Ripple has built around XRP. Beyond being a settlement asset, Ripple supports programmable stablecoins and other financial instruments. For example, their euro-backed stablecoin allows near-instant settlement across European networks while complying with regulatory frameworks. Institutions and central banks are paying attention because these tools reduce operational risk, cut capital costs, and simplify cross-border transactions. Ripple has quietly been integrating XRP into the infrastructure of banks, exchanges, and market makers globally. Partnerships with firms like Citadel, Robinhood, and Bitstamp demonstrate that large market participants are positioning themselves to leverage XRP's growing utility. Another crucial factor is market timing. Macro conditions, including potential recessions, monetary policy shifts, and geopolitical tensions, are pushing institutions to explore alternative assets. XRP's combination of speed, low transaction cost, and decentralized neutral structure makes it ideal for hedging and liquidity purposes. When large institutions start adopting an asset as part of their risk management and liquidity strategies, retail investors often follow. The domino effect of institutional adoption has historically created massive upward momentum in markets, and XRP is now at that critical inflection point. Lastly, the consistent ETF inflows and growing infrastructure support for XRP indicate that adoption is not just theoretical, it's happening now. U.S. ETFs have maintained consecutive days of inflows, reaching hundreds of millions of dollars. Digital assets like XRP are proving their resilience in a volatile market. As more institutions adopt XRP for cross-border settlements, liquidity management, and programmable finance, We could see a shift in global finance where XRP becomes a central, indispensable asset. For viewers of BullionIQ, understanding these dynamics is key because it shows that XRP is more than just a cryptocurrency. It's a foundational tool for the future of finance. One of the most important factors driving XRP's rise is the consistent support from institutional investors. These are professional money managers, banks, and large financial corporations who have the expertise and capital to move markets. When these institutions decide to allocate capital to XRP over Bitcoin, Ethereum, or other altcoins, it signals strong confidence in its long-term potential. The data speaks for itself. U.S. spot XRP ETFs have maintained consecutive days of inflows, totaling nearly $875 million in new capital. This level of sustained interest shows that XRP is not just a speculative asset. It is being integrated into serious financial strategies around the world. Beyond ETFs, the infrastructure supporting XRP is growing rapidly. Ripple's partnerships with major players like Bitstamp, Citadel, and Robinhood are crucial because they provide real-world use cases for XRP. Bitstamp, for instance, is tokenizing stocks on the XRP ledger, allowing institutions to settle trades quickly and efficiently. Citadel's direct investment into Ripple is another signal that market makers see XRP as a strategic asset. As more institutions adopt XRP for liquidity management and cross-border transactions, retail investors are likely to follow. This creates a compounding effect. Institutional adoption drives retail adoption, which further strengthens the market and pushes liquidity to XRP. Supply dynamics are equally important. Total XRP holdings on exchanges continue to shrink as coins are moved into private wallets or locked into institutional strategies. Since February, over 6 billion XRP has left exchanges, creating scarcity. This is critical because scarcity, combined with growing demand, naturally puts upward pressure on price. Major exchanges in Asia, like Upbit, Binance, and BitThumb, are actively accumulating XRP, signaling strategic positioning by large investors. Mid-tier exchanges are also showing rotation patterns that indicate professional buying activity. When you combine shrinking supply with growing institutional interest, you get a perfect storm for potential price growth. Another major driver of XRP's growth is its unique position in the global financial system. XRP acts as a neutral bridge asset, meaning it is not tied to any single country's currency or policy. This neutrality allows banks and corporations to transact across borders without relying on a single nation's monetary decisions. For example, Ripple has introduced a euro-backed stablecoin that operates within the European financial system, allowing for near-instant settlement while complying with regulatory standards. This demonstrates that XRP is more than just a cryptocurrency. It is becoming an essential tool for modern finance, bridging the gap between traditional finance and digital assets. Macro factors are also playing a role. With the potential for global economic adjustments, including recessions or monetary policy shifts, investors are seeking alternatives to traditional markets. XRP's low transaction costs, speed, and decentralized structure make it an ideal choice for managing risk and liquidity. Historical trends show that when institutions adopt a new asset during periods of uncertainty, the asset often sees rapid growth. XRP is now at that inflection point. Large institutional purchases, ETF inflows, and growing global adoption are creating momentum that could propel XRP into a new league of financial assets. Finally, it's essential to understand the bigger picture. XRP is not just a speculative play or a technology experiment. It is increasingly becoming integrated into the core infrastructure of global finance. From ETFs to stablecoins, from institutional partnerships to global settlement networks, XRP is positioning itself as a critical asset for the future. For viewers of BullionIQ, this means that paying attention to XRP today is not just about price speculation. It's about understanding a fundamental shift in how value will move around the world in the coming years. The next few months and years will likely be transformative for XRP, and staying informed can provide significant insights for investors at every level. We've already covered institutional adoption, ETF inflows, shrinking supply, and global partnerships, but now it's time to connect all the dots. The combination of these factors shows that XRP is not just a cryptocurrency, it is becoming the backbone of a new financial system. As more financial institutions, corporations, and countries start recognizing the efficiency of XRP, its demand will continue to grow, and the supply remains limited. This imbalance is what creates the possibility for massive price appreciation over time. One of the most exciting developments is Ripple's proactive approach to regulation and compliance. XRP is already aligned with global financial standards, and Ripple continues to work with regulators to ensure legal clarity for institutional adoption. Caroline Pham at the CFTC, along with other pro-crypto regulators in the U.S., have shown that the environment is becoming increasingly friendly for cryptocurrencies. This gives investors confidence that the XRP ecosystem is secure and sustainable. Regulatory clarity is essential because it allows banks, hedge funds, and other institutions to participate without legal uncertainty, which in turn drives further demand for XRP globally. Another critical aspect is the development of real-world use cases. Ripple's partnerships with major banks, payment providers, and financial institutions are creating an actual infrastructure for XRP usage. The euro-backed stablecoin and other digital assets built on the XRP ledger demonstrate that it is not just a speculative asset, but also a utility token that facilitates faster, cheaper, and transparent cross-border payments. By bridging traditional finance with blockchain technology, XRP solves real-world problems that fiat currencies and legacy payment systems cannot. This practical adoption is a key driver for long-term value. It's also important to consider macroeconomic trends. Global financial systems are facing structural changes, including inflation pressures, interest rate adjustments, and geopolitical uncertainty. These factors are leading investors to explore alternatives to traditional assets. XRP, being decentralized, non-inflationary, and neutral across borders, provides a safe and efficient store of value. As more investors seek alternatives to manage risk, XRP becomes a preferred choice over assets tied to a single country or economy. This makes it uniquely positioned to capture significant capital inflows over the coming years. We should also talk about network effects. As XRP continues to gain institutional and retail adoption, its network grows stronger. More participants mean more liquidity, better price discovery, and increased reliability for large-scale transactions. This self-reinforcing cycle creates momentum that can accelerate growth beyond what we typically see in traditional markets. Additionally, the transparent and decentralized nature of the XRP ledger makes it highly attractive to investors who value security and efficiency in financial transactions. The combination of scarcity, utility, and adoption is a recipe for exponential growth. Finally, the long-term potential for XRP is massive. If global financial systems continue to evolve and digital assets become more integrated into mainstream finance, XRP could serve as the neutral bridge currency connecting different markets and currencies. Its unique properties, including fast transaction times, low fees, and strong regulatory alignment, make it well-suited to become a global reserve asset. For viewers of BullionIQ, this is the most critical takeaway. XRP is more than an investment opportunity. It represents a fundamental shift in how the world will move money in the future. Staying informed, understanding the trends, and watching institutional flows will provide insights into one of the most transformative financial assets ever created.